I'm Sarah Borgeson-Keeter with REIT.com here at REITWeek 2014 in New York. I'm speaking with Matt Werner, Portfolio Manager at Chilton Capital Management. Welcome, Matt.
Thanks.
Now, in January, your firm launched the Chilton Realty Income and Growth Fund. Can you walk through the investment process and how you've positioned the fund to outperform the benchmark going forward?
Sure thing, Sarah. So our investment process draws on years of experience in the field of analyzing REITs and real estate. We start with a top-down process looking at the geographic regions, property types, the fundamentals, and what's going on in the demographic, and basically where the jobs are being created. So then we use that to put that into our proprietary earnings models at the bottom-up level, which then builds into a target price, and we use that to either have a buy and a sell price that is based on a required return based on the risk. Today we take a long-term view. Whenever we make an investment, we believe commercial real estate is a long-term asset, and so we've positioned the fund for a period of rising interest rates that we think will happen at some point in the future. So sectors that are more impacted by interest rates on the negative side, like healthcare, are an underweight, and ones that do a little bit better, like self-storage, are an overweight.
And you've served as a judge for the NAREIT's Investor Care Awards for several years now. What would you say are the biggest changes in terms of how REITs are communicating with their investors?
Well, I would say the biggest change has been the decline in the annual letter to shareholders. And what's replaced that has been the supplemental report that comes out with earnings every quarter has become much more robust, and they put a lot more money into their websites to make transparency for investors like us much better. Now the investor relations people are much more knowledgeable and can sometimes be a very good go-to person instead of having to go to the CFO.
Now, turning to sustainability, do you feel that REITs have embraced the concept that if they invest in green projects today, they will reap the benefits later on? And would you say that investors are also behind that idea?
REITs, I would definitely say, are on the forefront of the field, and they have been apprised of all the advancements that are going on in the green space today. And where it's made sense, they have pursued the projects and will continue to do so, especially where that return is apparent on the investment, just like they would any other project. Some have embraced it more than others, and obviously it depends on different property types and specific situations. The investor community, I believe, has not yet embraced it, and it's something that should be looked at a little bit more, especially for companies that that need to be looking around the corner to what their tenants are going to be looking for, maybe not today, but in several years, so that they don't become obsolete or become a less preferred place to go to a competitor.
Thanks very much, Matt.
Thank you, Sarah.
And for more news and analysis on all things REIT, please visit REIT.com.